taking a look at tech as we get ready for Apple tonight, Mike.
Yeah, Carl, so we have Apple Day, plus we have people trying to figure out if this huge FANG bounce over the last 2 days is real. So a few different slices of the tech market. Just the XLK, the main tech sector spider. By the way, this is the ETF with the highest weighting in Apple shares right now. After that sector split that we had a month ago, it's now 21% of the S&P tech sector. So obviously, this ETF has a lot riding on tonight. You see the lows recently. I think one of the significant things on that chart are above the April lows and certainly above the February lows. So tech has still not given up nearly all of the outperformance you've had this year. It's up more than 8% still year to date. Then look at the slices of ETFs that have, for lack of a better term, essentially a huge FANG bet embedded in them. Included in these are the ARC Web X.0 ETF. It's up 17% year to date, 5% the last 2 days. So what you're seeing there is these huge runs through most of the year. Big sell-off as a lot of the crowded FANG stocks got sold off, and then very strong bounces, but really leaving them well below what their trend was before. The First Trust Internet Fund, Dow Jones Internet Fund, FDN, is probably the one I think people look at as a FANG bellwether, as well as the Invesco Nasdaq Internet. So all that stuff, they're basically tracking in line with one another. But I do think it shows you that for as strong as this rebound rally has been, it really looks like a reflex on a very oversold chart right now. So it still has to prove that there's something behind it to carry things higher.
I mean, that's sort of the technical picture. Just fundamentally, anything in particularly worrisome within any of the earnings reports from all the big FANG names? I mean, some of them were quite good. Some of them were scrutinized a little harder.
No, Sarah, I wouldn't say that was the catalyst, right? It wasn't like people really zeroing in on specific fundamental challenges. The problem is the valuation swing has been so huge in these. So most of the outperformance came by people willing to pay more and more and more for the same dollar of earnings. So now, what's the floor once you're pulling back? Where does that stop? Well, they're still trading at a premium, most of them, to the broad market. So there's no mark of fundamental value that they're going to hit as a stopping point for when the stocks are going to decline. I do think people are making the point that Apple's in a bit of a different category in terms of it's not like a lot of hot money hedge funds are crowded in there with very concentrated positions in Apple, as opposed to what might have been the case for a while with Facebook. Netflix,
right.
etc.
Finally, we always like to check breadth yesterday.
Yeah.
Worst breadth for a 1% up day since '09. Yeah. Matters? Doesn't matter?
Yeah, it matters. I mean, I think you're evaluating what's really behind the move. So for 2 days, really, there've been kind of middling internal performance in the market when you had this bounce. So that's why I think yesterday's late day pullback from the highs, I think got people concerned. I think it just sort of shows you the market is in this zone where it hasn't yet proven that it's kind of broken the spell of this pressure, because you still have to get up to probably another 1 or 2% in the S&P before people say, okay, you've reversed this short-term downtrend.
Santoli's not impressed yet.
No, I mean, I'm open-minded, but you can't say Monday was the low. Basically, it's a lot.
You'll come back when that day comes.
Yeah.
Okay.
He's tough to please.